Well, thanks for joining us. I'm Tom Perrone from New England Consulting Group, and today we're going to talk about what happens when you start withdrawing money from your investment account, but the market is tanking, like we're seeing here in March in 2020. What are some of the options? We're going to cover that today. Thanks for joining us. About having an investment account where you've gotten to the point where you're retiring and you're taking money out. In this particular case, it's $25,000. In this case, we're talking about the returns in the stock market, and this is all hypothetical. And if you take a look at the columns, you'll see here's our return. Here's our ending value. We have 500,000. We took out 25. We earned 8%. This is our ending value. And you can see I did a hypothetical here. Very good. Our cumulative withdrawal is here. And at the end of 20 years, if everything held true here, we would have $811,000. We would have taken $500,000 out. And in this column, we're doing the same thing, same rate of return. But here's the difference. When I throw a negative in here, and we're in March of 2020, and right now we're seeing the stock market just dive because of the flu, the corona flu. So if I just make this 15%, and let's say I could have anticipated that. Well, not only did I take out the money, but I also lost in the market. My ending value is $403,000. If, on the other hand, I knew this was coming or anticipated it, I could have taken my $25,000 out. You'll see a withdrawal zero, meaning I didn't take it out of the investment world. I took it out of my cash value life insurance policy, my tax-free life insurance. And the only loss I had was the loss I sustained in the market. Ending value $425. But let's take it a little down deeper. So let's say we go -2. You'll see a rocky road here. I'm at 359. I took the money out of my life insurance, and my ending balance is 406. Now I'm only looking at two bad markets. Let's go by here, -10, okay? And you'll see right here, I've had 3 bad years. I've taken out 9 times this, or a total of 225. But I only have 261 left out of my $500,000. Even with these returns, where over here I have 334 because I was taking the money that I needed from another source. That's why sometimes when we talk to our clients, we suggest that they have another plan as far as putting money into it, and cash value life insurance is a very safe area to put it in. It grows very well. It doesn't fluctuate with the market. And when you pull it out, it's tax-free. So, again, this is assuming that we know that the down market's coming. But, each down market has a high and low. So, for an example, one might anticipate that if there was a down market this year, maybe there's going to be a down market here. Well, knowing that is good information because they don't have to take the money out of their investment account. And, just look at the difference between the ending values. 284 versus 345. There's a big difference because there's 75,000 we didn't take out of this. So when you're in a market that's very volatile and you take out money out of that account, it creates quite a market loss because of the withdrawal and the loss in the same account. So I look at this, and again, this is hypothetical, and I'm just picking random years, but it makes a good point that as you're growing an investment, not all of it needs to be in the market. We suggest that you put a lot in there to grow, but when you are on the distribution part of your investment, you want to be in a position of having option B, where you can pull the money you need somewhere else and ride the market, because there's a big difference. I mean, if I come down 10 years from now, $250,000 was taken out based on only 5 bad years. There's only $202,000 left here. Well, there's alarm. While there's quite a bit here, there's over $100,000 here more anticipation. So this is my little nugget for the day. So whenever someone talks to you about having another bucket of money to withdraw on distribution stage of your life, it makes a lot of sense. So again, thanks very much for tuning in. We appreciate your participation. Also, on the contact information, you'll see our website. Please go there and check out our associate members and their biographies. And also go to yourbusinessworth.com, which is a great resource for articles concerning business ownership and business transition. Again, thank you very much.